Hey everybody, Smart Silver Stacker here. Welcome to another live stream. Got to talk about the silver price today, the Federal Reserve, what Jerome Powell just announced at Jackson Hole, because what the Fed just told us is going to have some major implications for the dollar, for gold, for silver, for markets in general. So we'll take a look at what he said and what that's going to mean for all of these markets moving forward. If you want to buy some gold and silver, don't forget ST Bullion. That's where I buy mine. Right now, new customers can get gold or silver at spot by visiting stbullion.com/new. So don't forget to check them out with the link down in the description. Now, I'm going to just play some of the clips of what Powell said here. But before we do that, I want to keep in mind that what we just heard from Powell is against the backdrop of the revisions to labor data that revealed that the jobs market, which has been much touted by the Federal Reserve, by Powell, by the political elites, was just revealed to be much weaker than we had previously been told. So, I mean, that is the context for what you're about to hear from Jerome Powell. So let's just listen to what he told us and why this is so important.
We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate.
Okay, so I mean, Powell has touted the labor market as a prime reason for delaying rate cuts thus far. That has been one of the main talking points of the Federal Reserve because, jobs numbers, again, were grossly overstated. It's now been revealed for the year between March 23 and March 2024. And so, what we're hearing from Powell now, they're data dependent, and now the mandate of the Fed, which is a dual mandate to keep price stability, but also to support full employment, he's now more concerned about employment than inflation. And that's critical considering what we just heard about employment data from the Bureau of Labor Statistics. Now, let's listen to this next part, which is really the critical part, and it's part of why gold, silver, markets in general are rallying today in a fairly significant way. We'll look at the chart after we listen to what Powell has to say here. But, what he said did seem to light a fire under the silver price, under the gold price, and I think that that's just starting. So let's hear what he says here, because this is critical.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability.
So what Powell just told us is that the time has come to reverse policy, so rate cuts are ahead. He mentions that they'll be data dependent, but I mean, if we've learned anything from the revision to the BLS employment data, it's that the data can't necessarily be trusted. So, the Fed is going to be cutting rates here, and Powell has essentially announced that, pre-announced it in a fashion. I mean, strongly hinted at it just there, telling us that the time to reverse policy is here. In terms of monetary policy, that would mean rate cuts and potentially more, because you heard that last part he said they will do whatever they need to do to protect employment. So what does that include? Well, it could mean a lot more than rate cuts, and it also means that if we see, a big downturn in the job market, that the Fed will likely pull out all the stops and, will be willing to revert to direct debt monetization, et cetera, and, stimulate a lot more than just cutting rates. At least, that's what I hear when I read between the lines. And let's finish it up here.
With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions. So let's now turn to the questions of why inflation rose.
Okay, so he then went on to list several reasons for inflation, which none of which included massive deficit spending, direct debt monetization. I think he touched on a list of things regarding the causes of inflation. It was supply chains. He said that inflation resulted from consumers having extra savings during the pandemic on service spending because they were locked down, so they bid up the price of goods. He also mentioned the Putin price hike, the invasion of Ukraine by Russia, but never once did he mention, monetizing trillions of dollars of debt by expanding the Fed balance sheet. So, typical stuff from the Federal Reserve. Now, David Christoph in the chat here, and thank you to everybody joining the live stream, by the way. Do me a favor, smash that like button, subscribe to the channel if you haven't done that yet. But he says, when everyone is claiming victory on inflation, it's time to make a contrarian call for higher inflation. And I would tend to agree with that. Powell is taking a victory lap here, it sounds like, on inflation. He says that he's got plenty of room to cut from current levels. But, you got to think about how much room the Fed really has to cut in terms of real interest rates. So this is from CNBC, the most recent inflation data. You got core CPI at 3.2%, CPI at 2.9%. What's the Fed funds rate at? 5.25%. So, assuming this inflation data is accurate, that gives you real rates of a little over 2%. So it's not like the Fed has a tremendous amount of room to cut. Sure, they could cut to negative rates, meaning, if they go below the rate of inflation, then you've got negative real rates. They could do that to stimulate, but that would be massively inflationary. And, that's assuming that the CPI is accurate anyway. Let's say the real rate of inflation is higher, 4 or 5%. That means that we're already almost at a neutral interest rate. But, of course, inflation really is probably even higher than that if you use the, traditional methodology. All these numbers, just like that BLS data, are rigged, to paint a rosier picture than what we were being told. Powell mentioned U.S. economic growth remaining strong. What if the GDP growth data is just as cooked as the employment data, right? The whole narrative about the strongest economy in the world, in history, is all BS. It's all based on fake numbers. Kevin Belcher in the chat here says, Shadow Stats has inflation around 9%. I think that's if they use the same methodology that they used back in 1980. And yeah, that's probably closer to reality. If you go to the grocery store right now, if you buy anything, that prices remain incredibly high. But one thing that is still on sale, if you ask me, is silver. Silver today catching a nice bid following Powell's commentary. And we'll take a look at the chart here, a few charts, in fact. But, this is the pattern I drew out in yesterday's live stream. If you haven't watched that, go back and check that out. But basically, silver in February did this nice Elliott wave impulse move higher. 1, 2, 3, 4, 5. Then we had an ABC correction. Boom, boom, boom. Now it looks like we're on the next up leg. And today's move sort of confirms that. This is the chart I drew yesterday. And silver appears to, in just one day, have reversed that decline. The sell-off we had yesterday, I had mentioned that was a buying opportunity. Yeah, sure, silver could have fallen today on Powell's commentary if he had been hawkish, but he certainly wasn't. He essentially told us that interest rates are now coming. The only question is, how much are they going to cut? And if the Fed truly is data dependent and the data ends up, being revised to reflect reality, well, it means they're going to be cutting aggressively because the economy is nowhere near as strong as we've been told. But from a technical standpoint, silver looks very, very good right now, I think. Yeah, it's off a little from the highs. I think it peaked while he was speaking. Some of that initial enthusiasm might have worn off, but still, we are near the highs of the day, back up to 29.61 on spot silver. Likely heading much higher. I think we may be kicking off the third wave here of our next Elliott wave impulse move higher. Turning to gold, back up over $2,500. It had tested this trend line coming down below it yesterday, actually, on the sell-off, but today it looks like we're still just above it. If we can close the day above that trend line, I think from a technical standpoint, that'll look really good for the gold price in the short term. Ultimately, though, what we were told today, means that in the long term, gold and silver are both heading much higher. It means the dollar is going to be weaker. The dollar selling off on today's commentary by Powell. You can see yesterday we got what I described as a dead cat bounce. And once again, DXY resuming its downturn. Now, if we zoom this out a little bit, you can see that the DXY just a couple days ago in August, like last week, penetrated this critical support here at this upward sloping trend line. And now, the bottom, I think, is going to be very low for the dollar, considering what Powell just told us. That's why the stock market is rallying. All the major indexes up today, gold, silver, platinum, everything in the green. Even Bitcoin is catching a bid today. So, more easy money is in the pipeline. Look at this. This is the CME FedWatch tool. You've got the possibility of a 50 basis point rate cut in September, up over 10% compared to yesterday, following Powell's commentary. So markets are interpreting this as a very bullish development, a very dovish development on the part of the Fed. Now, it's not bullish for the dollar. I think ultimately it's probably a bad thing for the U.S. economy too, because what we really need is like a recession. We need, a clearing out of all the dead wood. It's something that hasn't really been allowed to occur since the great financial crisis. But what we're going to get is more debt, more deficits, easy money, more inflation, and as a result, you're going to see much higher prices for assets such as gold and silver. And I think that once the reality of the situation regarding the economic data, people maybe are starting to catch on to the fact that the data has all been cooked, and that what we're really in the midst of here is a stagflationary decline that could get very bad, especially as the Fed seems to be doubling down on their flawed Keynesian, modern monetary theory techniques. The interest in gold and silver are going to become even more, significant among retail investors. It'll probably take a big rally in the price of silver, though, before we see a significant amount of retail buying. And that's why I still view silver as one of the most undervalued assets, because when that day comes, the price of silver can move very violently. There was something else that Powell said at the speech. I didn't get the clip of it, but he made a joke, which shows you how seriously he takes all of this. But he made a joke saying that he was outlining the history of how we got to this point, of inflation over the past several years. And he was talking about in 2021, when he kept using the word transitory to describe inflation. Thank you, Art Joe, for the super chat, sir. Appreciate that. He made a joke saying that the good ship transitory was a crowded one. Ha ha. That is hilarious, Powell. I think I heard Yellen chuckling in the background after he said that. But it's true. There were a lot of economists, a lot of the central bankers, a lot of the political elites who at that time when inflation was rising kept saying it's transitory, it's transitory. Of course, if you were watching this channel, we weren't under that impression. I know many in the stacker community understood that when you monetize, trillions of dollars of debt, inflation is anything but transitory. But right now, I want to point out that right now there's another ship that is crowded. Back then the good ship transitory was crowded. Turned out those people were on the wrong ship, right? Inflation was anything but transitory. It was entrenched and unavoidable considering the monetary policy. But right now, there's this other ship, the good ship, normalcy bias, modern monetary theory. And that is that everybody thinks, or many people on this ship think, that right now, $35.25 trillion is totally sustainable. Multi-trillion-dollar deficits, totally sustainable. A declining role for the U.S. dollar as the world reserve currency is sustainable. That funding multi-front wars to the tune of trillions of dollars is all sustainable. That printing money to stimulate your economy is all sustainable. And this is the ship that everybody's on right now that is going to sink to the bottom of the ocean, unfortunately. And there's not going to be enough life vests. The life vests are going to be gold, silver, physical, tangible assets, things that can't be printed and created out of nowhere. And the rush into those safe haven assets when that ship of modern monetary theory starts to sink, is going to make people's heads spin. And I can't tell you when that's going to happen. It could be tomorrow, it could be years from now, it could be decades from now, right? But the way I see it from where I'm at, none of this is financial advice, keep that in mind. That situation ultimately is going to be unavoidable. And when that happens, charts for silver, charts for gold are going to be meaningless. And I don't know where the ceiling is going to be for prices. I hear a lot of people talk about, the YouTubers who talk about fantastical prices for silver. Silver will never be $1,000. Listen, you got to think about it this way. On a long enough time frame, silver will be, an infinite number of dollars, right? Because the fiat dollar system that we have, the global fiat currency system where everything around the world, all the currencies are backed by nothing, it's not going to last forever, right? So what's the ultimate bottom for the value of the dollar? It's zero. No fiat system, thank you, Corium, for the super chat, has ever lasted, has never lasted through the test of time. Gold and silver are the only money that have lasted for thousands of years. Many, many attempts at fiat currencies have been attempted. They always end the same way: massive inflation, massive mismanagement. And, that's where we're headed. It's unavoidable. So, when people say, $1,000 silver will never happen. No, it absolutely 100% guaranteed to happen. It's just when, right? That's the question. What is the value of dollar, or what is the value of an ounce of silver in, say, like a Deutschmark, or a Reichsmark from the Weimar Republic, right? It's infinite, because that currency doesn't even exist anymore. Or a Zimbabwe dollar from a couple decades ago, or an old bolivar in Venezuela. What is the value of an ounce of silver in that? It's millions, right? Infinite, because those currencies have been completely debased. And unfortunately, you got Powell telling us here that we're on a path towards debasement of the dollar. Now, the dollar is a little different in the sense that it's the global world reserve currency. It's got a bunch of aircraft carriers backing it up. I get it. But that plan, that system, I think is one that inevitably is doomed to failure. It's just a matter of, how long can they kick the can down the road? How long can they keep it going? So, people often say silver, gold, they're not investments. It's kind of true. I mean, if you bought gold at any point in history, you're in the green right now, so it's kind of an investment, right? But it also has sort of a role as an insurance policy against that type of an event. And, we got $35.25 trillion in debt. It's climbing rapidly. The Fed's about to cut rates. We got an election going on right now. Neither party is talking about cutting spending. It's all just about what they can promise to voters. And so, we're on a path towards destruction of the dollar via debt, unfortunately. Debt is what is the basis of a fiat currency. Everything is debt-based. Every dollar that comes into existence is borrowed. And that's just the system that we live in, folks. So that's why I'm stacking. But anyway, let me know what you think in the comments down below. Let me know what you think about what Powell just told us. Is this going to light a fire under the silver price? Is it going to send gold to new record all-time highs? In the short term, I'm not 100% sure about that. We could maybe even see when the Fed cuts in September, could see a sell the news kind of buy the rumor, sell the fact kind of event. That's possible. Everything right now is pricing in, significant rate cuts. So if maybe we get a quarter basis point rate cut, or the Fed disappoints in some way, you could see a short-term downturn. I'm not discounting that. But in the long term, I think that the price of everything denominated in dollars is going to be heading a lot higher because of what we just were told by Powell. So again, leave me a comment down below to let me know what you think. Stay safe and happy stacking, everybody. I will catch you next time.